All right, all right, all right. Bright and early, 8 o'clock in the morning. Market's already been open for half an hour. What are we doing? Sitting around on our heinies, waiting for the market to start, waiting for class to start. All right, guys, good to see you. Everybody's here. And I can see everybody logging in quick. Nice to see you. Glad to see you first thing here in the morning. And this is the best time to trade, actually, because the market's moving, it's shaking, it's popping, it's humping, it's doing all the things. So today we got a very important day. We got a long day. Hopefully we can get it done in the hour that we've got set aside for us, but we may go over just a little, but maybe not. Maybe we'll get it all in there. First thing I want to do is I just want to talk to you a little bit about the email I sent out to you. So here's the email I sent out. Now, for those of you who don't know, we got some people in here not from the university. This is a lab for my university class. I teach finance, I teach trading, stock market trading down at Utah Tech University. And so this is the lab because we teach night classes and we can't trade at night. And so we need to trade during the day when the markets are open. The markets just opened about 30 minutes ago. And so we come here where we can actually practice what we preach. So last Friday, we had our final class for the technical analysis class, where we focus a little bit more on day trading, but we do focus on the technical analysis, technical side of trading. And we finalized the class on Friday talking about different types of orders and what the order rules are. So we're going to cover those today. I'm going to show you how to use all the different order types and some of the different strategies for order types. And then we're going to talk about a couple of the indicators that we talked about on Friday. If we have time, we'll look at some of the other indicators as well. And if my voice lasts. All right. And then most important thing is my new book. All right. You got to go to the bookstore, go to Amazon and pick up the new book. It's by Grant Thorne. All right. Grant Thorne. And then it's called The Orion Protocol. So go get your book from Amazon. Don't forget, $7. It's going to break the bank, man. I'm telling you. But it's good. It's a fun read, and you're going to learn a lot in there. There's a lot of stock tips and everything else in there. So a lot of fun to read that book. It's a novel, but it's based on real, true life facts. So of course, it's got Nancy Pelosi and all of her trades in there, and some of that stuff. So it's a fun book, fun read. You're going to enjoy it. So the next thing I want to do is I want to talk to you. First of all, I promised that I was going to teach you about Fibonacci bars. All right. So I mentioned that on our lab at the first day. I said, we're going to look at 1 minute charts, 5 minute charts, 10-minute charts. Remember all the different time frames of the charts? Well, there's a kind of chart that doesn't have time involved. All right. So when you have a 1 minute chart, you get a new price bar, open, high, low, close time marker for how far the market moved in that one time frame. So the chart that we're looking at right now is a 1 minute chart. You can see it up here in the upper left-hand corner. It says 1 minute Russell 2000 mini. So we're in the futures market. This is the Russell 2000. So this is a average price of the 2000 stocks that make up the Russell. So this is an index. All right. It's kind of like it's a big basket of funds. It's called an ETF, exchange traded fund. So it's a big basket, and you can come in here and trade just this one market, and it's going to spread out the spread or the trades across 2,000 different stocks. All right. Now we are in the futures market, so we do have leverage. So the trade is going to cost you about $1,000 to put this trade on. We come and look right now. Well, day margin right now it says is 570. That I'm going to say that's a little. It may be 570, but I doubt it. I bet it's closer to $1,000 when you put that on. But it says 570, so maybe it's 570. All right. Sometimes it gets updated and it doesn't update all the time. So we'll see. Let's see. I want to go look at another one. Let's go look at the S&P 500. This is the S&P 500. Let's go see what it's $1,400. Day margin on that one's $1,400. I believe that one more. The Dow, let's go see what that one is. The Dow says 785. So maybe that's what it is. It may be close. All right. So that just seems a little low to me right now for the Russell. But it says 570. It's a little smaller market, so maybe that's right. I always figure about $1,000 for the mini contracts. But the Russell is the smallest of the four that we can trade in the futures market. Again, we got the Dow, the NASDAQ, the Russell, and the S&P 500. All right, and you can see the market's been flushing down pretty hard. And if you look at the pattern, this is the daily chart. So each bar represents one day. Look at all the hairy tops and bottoms. This thing's been very volatile, very volatile. It's been going all over the place. But you can see just a nice little ABC pattern. We talked about Fibonacci rulers, remember? So there's your A, your B, and your C. And so that's a Fibonacci projection. And it came right down to where? 100%, just like a train on rails. Now, I said that I probably didn't expect it to come down to 100, probably down to 90, but it came down to 90. If you'd had your order right there, you'd have caught that bottom just perfectly. And now it's turning around, starting to rally. We're getting a little bit of a rally. So what do we expect with this? Well, that was perfectly anticipated, right? Just because you are a technical analyst now, you've been well trained, you know that markets have a tendency to move in waves, and they make these two drive patterns down. So if we take our Fibonacci ruler and we just go from the low to the high, right? And then we say, well, markets have a tendency to come back into the Fibonacci sweet spot between 38.2 and 61.8, just like that. There it is. And this is the Dow. I mean, this is the Russell. This is I didn't make this market up just for this. I mean, we only have 4 markets we can look at. And this is just like straight out of the manual. The manual, Land? What manual? I didn't know we had a manual. Of course we have a manual. Everybody who's in the class knows we have a manual. What manual are you talking about? I'm talking about the manual. Oh, that's Pitt News Magazine. But here's the manual right here, right? The Fibonacci effect. This is the manual. So right straight out of the manual. It's called the Fibonacci effect, the stock market playbook of strategies. And if you don't have this, you can go get it on Amazon. All right. Oh, you can buy the digital version like I've got here. You can buy it over on pittnews.com in the store. But if you don't have the digital version, you can go get if you would rather have paper version, you can go get the paper version out on Amazon. Just go search Lan H. Turner. Lan H. Turner, that's my name right there. Lan H. Turner, and it'll come up. If you don't put the H in there, you won't find it. You'll find Lana Turner. She's cute, but she's not going to teach you how to trade Fibonacci. All right, so here's the Fibonacci stuff in here. This is what we're talking about. Okay, so it's all in this book. And then, of course, if those of you also have the supplemental slides that go along with it. Oh, why this came up just happens to be here. I'm going to use it. The scammers have discovered me. Beware. All right. They're pretending to be me. They've got fake accounts out there on Twitter, on X, on Facebook. They've got fake accounts that say, "Hi, I'm Lan Turner." And they're not. They're not me. And it's a fraud. I will never call you on the phone and send you an email or private message you asking you to invest, trade, or send me money. I don't do that. So if you get a message from me that says, "Hey, this is Lan Turner, let's invest in Bitcoin together, send me your money and I'll do it for you," don't do it. It's not me. All right. I do not trade other people's money for them. I will never ask you to send me money so I can trade or invest it for you. I will never contact you with a cryptocurrency trade recommendation. All right. I don't do that. And that's what they're doing out there. So they're pretending to be me. So please be careful. Be careful. Be careful out there. All right. All right. So here we go. This is the Fibonacci ruler. And you can see we made a nice little ABC pattern down here. Now, generally speaking, when a market does this, this is the first Darvas box. All right. So this is good news. Everything's following the plan like a train on rails here. If we turn on bulls and bears, you can see we had not a nice little 3-drive pattern. In fact, it was an ugly 3-drive pattern, but nonetheless, it was a 3-drive pattern. We got drive 1, counter trend. Look, there's an ugly drive 2, other little counter trend, ugly drive 3, and then we got our ABC back. All right, so that's our ABC back, and now we're starting to get the rally back in. So this is one Darvas box. Now, if everything follows traditional patterns, this should stay and start to rally once again. This should be a nice little rally up. We should get another pull back down in here, give you another opportunity to buy, and it might just go sideways a little bit in here because it does that sometimes, right? Remember our roadmap. Don't ever forget the roadmap. All right. Now, it doesn't have to follow the roadmap exactly, but it's pretty, it likes to do it. All right. It likes to follow this roadmap. And so if you look at this roadmap, you can see that the market has been following this roadmap like, oh, daggone it. I'm having the hardest time with these little pictures. I want it to be small. Come on, small, 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 so we can see both at once. How can I do that? There we go. All right, see, that's the roadmap. So you can see it kind of went up like that. It had the little breaks in here. See how it has little breaks in there, right there, right there. A couple more in through there, just like this. And then when it gets up to the top, see how it does the top thing? Looks just like that right there. See that top thing? Let me get out of the way. Move me around. And it gets see that little top thing? Just right there. And now see how it's coming down? ABC, it's coming down. Fibonacci ruler, 50% level. It's hard to see the 50%. Now, we expect it to go sideways and do a little accumulation in here, and then we expect it to rally once again, okay? So that's another Darvas box. So this is one Darvas box, and we'll expect the low point in here to be the next Darvas box, and we would look for it to turn and start to rally once again. Oh, come on, get out of there. So then we expect that to go up one more time and give us another 3-drive pattern. We'll draw it in here for you. So we expect it to make in here some sort of a little 3-drive pattern. Not that one. We got to do it like this. Where would it go? Little tool. There we go. Okay, back up in here, and then another little ABC pattern out in here, like that. Oh, one more. Oh, that's not good. Yeah, that's good enough. That's good enough. But that's kind of how we're looking for this. Now, that would be a bull market, all right? Because then we'd end up with this one here, this market out here, being larger than this market out here, higher, right? That's the whole idea. So if you blow this out and go out to this is a daily chart. If you go out to a weekly chart, you would see an Elliott wave pattern. You'd see another higher highs and higher lows. That would be an uptrend. Now, if you don't believe that the market's going to do that, you would expect it to have another fall in the market. We would expect, a negative nilly in here, and it's going to come down, and it would make a little rally, and then it would come down here, and that would be a 3-drive pattern down. And then we'd expect the little ABC pattern up like that, but then we would expect the market to make another 3-drive pattern down. All right. So then we just like this. And that would be a bear market. All right. So that's a bear market. And we'd take this Darvas box, and the Darvas box would be down here. And then this low down here, right? This low would be lower than this low here. So on the bigger time frame, that would be a bear market. This would be a bull market. So what's going to drive the market? Remember, it's got to have a catalyst. So the catalyst, if we have positive fundamentals for the whole market, is the United States doing well. Well, Trump's brought in trillions of dollars in his negotiations, right? He went out there and waved his magic wand, and he's got all these different countries investing trillions of dollars into the market. Now, it's not coming in immediately. It's going to take them years and years to get all that money into the country because they're building factories and they're bringing jobs in and all that kind of stuff, right? So we got, it's not like it happens overnight. You gotta give the market, give the economy time. So that's what we're trading here. We're trading the U.S. economy because that's what these big indexes follow. They follow the biggest markets in the biggest companies in the United States. That's what an index is. All right. S&P 500, 500 largest firms in the whole United States. That's basically the economy. So when people tell you the stock market is not the economy, that's a bunch of BS. The stock market is exactly the economy. That's what the economy is the stock market. That's why we trade it as if it's the economy. Dummy. It's exactly the economy. The only people who tell you the stock market is not the economy are politicians when they're trying to win elections. All right. And the market's down. So, but then when they get in office, everything they're trying to do is to build the economy and make the stock market go up, right? Of course, the stock market's the economy. It's exactly what the stock market is. You're trading the American U.S. economy. All right. So this is what we're looking for, whether we're going to get another continuation of the downtrend and then a die of the market and it comes way down here, or whether we're going to get an uptrend and comes up here. Now, there's got to be a catalyst that'll cause it to do one or the other things. There's always something going on in the market. But generally speaking, big banks and hedge funds, now I've been tracking the big banks and hedge funds, and they've been buying. So they haven't been liquidating a lot of positions. But they also do a lot of buying along the way because like BlackRock, Vanguard, and State Street, who are the biggest ones in the world, right? They own the whole world. They've got all the money. The only money they don't have is what's jingling in your pocket, and they want that too. So you got to be careful in these markets because those guys are out there trying to take your money. And so they're trying to tease you into doing things that'll give up your money to them. All right. So that's just a little economics lesson there real quick here before we go in and we start trading, because I wanted to teach you a little bit about another type of indicator. I guess you could call it an indicator. It's kind of an indicator, but it's not really an indicator. It's a different way of looking at the market. So this is the 1 minute chart, right? We talked about that. And what we're looking at is each price bar represents 1 minute. Now, you're going to get a new price bar every minute. You can see the little countdown timer up here. You can see that we got 25 seconds, 28 seconds until we get a new bar. Well, there's another kind of bar called a range bar, and I really like it. I use it more than the 1 minute chart. In fact, I use it all the time when day trading. I don't really trade on the 1 minute chart. I just wanted to teach it to you because that's the most common that most people trade on. I don't trade on it. I trade on range bars. So if you want to do it the way I do it, you would trade on range bars. Now, range bars don't have time involved. A range bar only has the trend involved, the trend being higher highs and higher lows, lower highs and lower lows. One range bar can be any time. It doesn't matter because we get to specify how big the range is that it can move before it's going to give us a new bar. That's why we call it a range bar. Okay, so we set a range for it. Now you can see right here on my screen, I've got a range 12. So I have set the range for this chart to be 12 minimum moves. Now the market can only move in its smallest increment, right? That kind of makes sense, right? It moves in the smallest increment. Now, since we're on the Russell 2000, that would be 1 penny, since it's a dollar-based product. Sometimes we're trading corn or wheat or soybeans, and those don't trade in dollars. They do, but they trade in bushels and stuff like that. So we have range bars, but so we call them ticks. Sometimes if you're in the forex market, they call them pips. All right, so pips or ticks or pennies. All right, so whatever market you're in. So when we're in this futures market, we call them ticks. Okay, so like the tick. So it's a tick. Each tick is a minimum move, and a minimum move for a tick is 1 penny in this market. So if we say 12, it's going to be 12 pennies or 12 ticks. But the problem is that in the futures market, 1 tick doesn't equal 1 penny. That's over in the stock market. Over here, 1 tick can equal 12 pennies or $12 or $8 or $5. That's the difference between this market and that market. That market, everything is done in pennies. This market over here, although they're pennies, they're not really pennies, they're ticks. And a tick can represent any amount of money. A tick can be $12. A tick can be $8. A tick can be $5. It depends on the market. And again, that's how we generate the different different leverage on different markets. So you could have a mini account where 1 tick represents $12. You go down to the micro account and 1 tick would equal $1.20. All right. So that's the same thing with contracts. That's why we call them contracts. We don't call them shares like we do in the stock market. When we're in the futures market, we have to use different names for things because everything's not consistent. And that's a little bit of the problem why some people struggle with trading over in the futures market, because you have to learn a little bit different language. It's not hard. You just have to spend a few minutes learning it. You're used to the stock market version of things because it's so easy, because it's just based on what we do when we go to the grocery store. We pull out $1 and it's $1, and we know that there's 4 quarters in $1, and we know that there's 10 dimes in $1, and we know that there's 100 pennies in $1, and that's easy. We've been taught that since we were little tiny children buying candy at the candy store. But that's not how we do it in the futures market. So in the futures market, we have contracts, and 1 contract can be any number or size of something that we want, because everything's not cut and dry, because we have bushels of corn, we have barrels of oil, we have ounces of silver and gold. It's not that straightforward. So how do you do this? Well, we had to come up with a different method of counting it. So we call it contracts, and then 1 contract is the smallest increment of something that you can buy, just 1, but that 1 contract can be any size that we want to make it for whatever it is that we're trading. So 1 minimum move, or one contract can have 1 minimum move. So 1 minimum move could be $12 of 1 contract, and the 1 contract could be something like 500 bushels of corn. All right, that's how it works. So when we're trading the Russell 2000, we're not trading pennies of the Russell 2000 like we are in the stock market. We're trading one contract of the Russell 2000. If you come over here to the key, it tells you exactly what it is. 1 contract represents $50, index currency of $2,402, or $120,000. So in other words, if you were going to go trade the Russell 2000 over in the stock market, you'd have to put up $120,000 to make the same amount of money as what we're making over here with 1 contract. So 1 contract represents $120,000. All right. So that's the name of the game. You can see the index currency price is trading at 2402. So that one contract is going to change depending on how big that is, depending on where it's trading down here. So down here it was trading at 2377. So that 120 would have been smaller. All right. So one contract represents a $50 move. And then the index. So a tick or minimum move, one minimum move is 10 cents, 10 points in the dollar per dollar index and worth $5 per contract. So that means every time you do the minimum move, one minimum move or one what we would call a penny in the stock market, we call it a tick over here. So each tick represents $5. Does that make sense? So this minimum move that this thing can move is $5. So if we're going to come back over here and we're going to do a 12 ticks, that means 12 times 5 is how big our tick is going to be. All right, so we come back over here and I'm going to turn this on now. Watch what the difference is. When I turn this on, boom, look at the chart. All right, that's a nice looking chart. It's easier to trade. I'm going to go back to the 1 minute chart. Now I'm going to go back to the range bar 12. Now remember, from here to here, this started at 7:30 in the morning, and we had 1 minute for every one of these bars. Now when we come out here, we're going to go to a range bar, and look, it goes way off the screen. This is 7:30, way back here in the morning. So 7:45, 7:30, here was the opening bell right back here at 7:30, right there. That was the opening bell, okay? And look what the market did on the opening bell. 3 drives right up there. Drive 1, counter trend. Drive 2, counter trend. Drive 3, and then it flushed back down, just like a train on rails, just like you saw it in the manual. All right, now does it always do that? No, it's not always do that, but it happens often enough that you can trade it. Now remember what we always say: smooth, 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 choppy, 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 smooth, 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 choppy, 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 smooth, smooth, smooth. Now you can see as we started getting up here into the third drive, remember what our odds are. The odds are, I'm going to turn on this other indicator. I'm going to turn on the bulls and bears, and you can see the 3 drive patterns a lot easier, okay, because it draws them out with the blue lights. Now remember the excuse me. Remember, the blue lights are just mathematically calculated trend lines. So we're just going to draw our trend lines along these lines like this, right? That's technical analysis. You're drawing trend lines along the bars, the highs and the lows. This is support along the bottom, this is resistance across the top. Support along the bottom, resistance across the top. Support along the bottom. Now we got up to the third drive. What do you think is going to happen at the top of the third drive? Oh, it's going to go higher, Len. I know it is. Well, the odds of that happening are pretty low. Doesn't mean it can't go up to a fourth drive. Certainly can. Just the odds are pretty low. All right. The higher you get up in this trend, the lower the odds become of the market going up. That's why we use these indicators to kind of help us mathematically calculate out whether this market is going to rise or fall, rise or fall, rise or fall. Now, if it starts to get choppy and starts to hit through and knock down our little model here, we have to sit aside. Well, we're not sure what it's going to do. It's starting to break through our little model here. But you can see this was a kind of a perfect little setup right here first thing in the morning. And then as we come along throughout the day, this market, you can see it started to move again, started to make some nice moves out here. That's a big move right there from here to here. Let's just see how much. If we put in our, what did we say? Our $570, and we got in just, let's say, down here at this, where this green bars, the green dots to the blue dots, that was a $300 move. Now you can't say, well, how many minutes and count the bars? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, all that many minutes. Nope. Why? Because each one of those bars is a range bar, meaning that the market has to move 12 minimum moves before it will make a new bar. There's no time involved. We have no idea how long that's going to take. We have no idea. No idea how long that's going to take. So we come in here, we got this little bar calculator, and we can see from this little arrow right here over to this arrow right here, that was 3 minutes and 52 seconds. That took 4 minutes to go up there. All right. Now 4 minutes, sometimes when you're sitting here trading, that feels like a long time. It feels like, mold's growing on that thing. So 3 minutes, that's a nice little scalp trade, little day trade. Okay. Now, how long did it take to go from this arrow to this arrow? let's just draw our little dollar thing in there. So from this arrow, let's just put it right where it crossed the blue lights to this arrow here where it crossed these blue lights. And then it's over the font. We'll see how long that was up here. I'll move it up here so we can see. That was 2 minutes, 2 minutes and 2 seconds. So 2 minutes. So it took it 2 minutes to come down here. So it took it 4 minutes to go up and 2 minutes to come down. And now it's going to go back up again. How long did it take? See, that's not minutes. Each one of those bars doesn't represent a minute. There's no time involved. One bar could be an hour long if it takes an hour to go 12 minimum moves, 12 ticks. All right. What's 12 times 5? Somebody got that off the top of your head. 12 times 5. That's 60. So 12 times 5. Each one of these bars represents a $60 move in the market, 60 bucks. All right. So you can kind of calculate if each one of those bars represents $60 at a full move. Now this is, it didn't go up $60 because some of them went sideways. So we draw our little dollar calculator in here. That's what this little dollar sign is up here. You just click on it and draw it from one point to the next, and it'll tell you how much money that was. That's $235 with your investment of $570, right? You're putting $570 in, and in 2 minutes and 24 seconds from that blue light to that blue light, you made $235. Now the market's moving nicely. That's why we like to trade this in the morning. That's why I don't generally come and do trading with you in the mornings, because that's when I'm trading. I want to trade my own money in the mornings because that's when the market generally does this type of thing. We like power hour. Power hour is not as good as the morning session. So I come and I'll play with you during power hour when the markets are moving. In the afternoon, we start getting into 10, 11, 12 o'clock. These guys start to get lazy and the market gets lazy and guys go to lunch and they take breaks and all that kind of stuff. But everybody's here sitting in the morning waiting for the market to make these types of moves, because look how much money that was. If you took your little signal right here, right, market comes in, makes a nice little run up, counter trend, right? That's our little ABC pattern right there, boy. I say you're going to miss the first leg. Oh, I'm going to miss the first leg? Yep, but look, you're going to catch that second leg. And look at that. It went right to 130.9, just like a train on rails, just straight up. Man alive, look at that thing. That's beautiful. Where was I this morning? I was sitting here teaching you. So look at this. So that right there would have been from this little counter trend, right? You draw your little natural trend line. Now we use a spider web because remember, if you go look at the manual, there's a little spider web between each one of these. And the spider web, let me talk about the spider web real quick. Let's get rid of this just for a second. The spider web is the natural trend line as it comes down. So you can first natural trend line, right? And then the second natural trend line right in there where the little lights cross. Now I'm using 2 indicators, so it's a little confusing. You can use just the blue light. In the manual, I just use the blue light. I don't use the little green one, but the little green one's a little tighter. So you don't lose as much if you're wrong. It doesn't have to come all the way down here to stop you out. But then you come in here, and then that's the next one. We're going to do another little spider web across the blue one just because we're using it. And then we got the horizontal, which is a breaking of the previous high, right? So that's a key indicator point right there. Remember our Fibonacci bow tie. So that's the top of a bow tie. Now this market didn't come all the way down. We kind of expected to come up, go the same distance, maybe come down and touch that same price level right there, and then go up from there. And then that's what gives you that little bow tie pattern, right? Bow tie. Let me draw you a bow tie just real quick so you can see it. For those of you who are struggling to see what bow tie land, right? Here's a bow tie. We didn't get a bow tie. That's what I'm saying. We didn't get one, but that's generally what we would expect that market to do, to be a bow tie, and it just blew right through it. So that was really beautiful. And because you're trailing on your trailing stop on either maybe both your green light and your blue light, or maybe just a green light, or maybe just a blue light, then you'd trail your stop up, and that's where you'd get out. You'd get out at the top where it crossed over and hit your blue lights. And of course, when it hits the yellow lights, that's where we got the arrows turned on. So that's what we got there. That's a beautiful little setup, and that's what that's the kind of thing you wait for. You're going to miss the first run, right? Because the market's coming down. Oh, well, actually, it wasn't. It's going up, then it come down, and then it went up again. You might have caught that one just because this is higher than this one. See that? I don't know what you would have done. I don't know what I would have done. You don't ever know. You can look back and guess. We came down here, and this was actually higher. This was the low down here, and it didn't touch it. So you say, well, it's a higher low, still in an uptrend. I might have taken that. because that wasn't a lower high. If this would have been down here and broke this low, then we certainly would not have taken it. But since it's above this high, you're still in an uptrend. And you might have caught that one, and you might have gone to your little counter trend here, and you might have caught this one. This would be the one you missed right here. You might have missed that one because you're waiting for it to turn around and go up. Yeah, see, that was the lower low. So we would not have caught that first run. See how it made a higher high here? This is higher than this one. This one here is higher than that one. See that? So you got higher highs and higher lows, but that we didn't, because this is a lower high. So this ends up being what we call the head and shoulders. Now, things are going to be elongated, and they're going to be kind of funny because you're not using 1 minute bars, right? So you still have to apply the same rules. They're just going to be kind of a little bit elongated sometimes because it's a longer period of time. So this is your left shoulder. This is your neckline. This is your head down here. This is your other neckline up there. And that's your right shoulder down there. That's a bottoming pattern, right? That's your little head and shoulders pattern, that little pattern where this is the low and it's the reversal. And down you go. And then up that market went. You might have taken it right down in there. That's what I told you. You want to buy these dips. Don't wait for it to break above the previous high. All right, hold on a second. All right. So are we good with that? Is everybody happy looking at that, seeing that? Okay, now we're going to come in here. We're going to slide the chart over a little bit further. That's a nice, beautiful ABC pattern. Again, we drew that little ABC pattern in there just like that. And then up it went all the way to 130.9. It's got that 161.8 up there, which is another golden ratio for us, or a Fibonacci number. But it's the 130.9 is the golden ratio. And then the market kind of just died right there, didn't it? It made that little pattern in here, just this little triangle formation in there like that, and then it broke out the bottom. Now I want to show you something. See how this made this first little dip, and then it came up, and then it made the next little dip, and then it dropped out the bottom, faked out, and then it came right back. Remember, I told you they oftentimes like to come right back to the dead center. So I'll oftentimes buy or draw a line between the center of the triangle formations like that. But see that little double dip in there? If you go over to your manual or to your supplement, we'll go take a look. I think it's in the supplement. It might be in the manual too, but this is the supplement, right? That pattern is here in your supplement. So you can see right, where is it? Right in here. We got so many of these little patterns that I've highlighted for you in different ways to trade them. I have to find the one I'm looking for. Right there. See that? See how it's got a little, it's not exactly the same, but you can see the little double side in there. See how it goes? It comes up and then it goes down, up, down. And now this one broke out the top. This one here comes down, up, out the bottom. That's kind of common where you get the two little moves inside of that wedge pattern. That's what makes a wedge pattern. So if we come back and look at the chart right there, you got the two little moves. See that? Now it went a little elongated right in here. That's why we don't take every single breakout, because if you'd have tried it every single time it broke a little move in there inside that pattern, you'd have got knocked out. So you wait for it to move, and then it rebounds, and away it went. That started trending again. Now it's starting to die out here. You can tell we're at 8:30. So the market's been open for 1 hour, and the market's starting to slow down. It's starting to die. What would we do? We'll stop trading. We're done. We traded the first hour of the day, which is what most people do, which is why the market's dying right now. It's going sideways and dying. The majority of day trading is done. Okay, so if you trade from 7:30 in the morning until about 8:30 in the morning, and then you can be done. You're done day trading for the day. Now, if you sit around here and wait for something to happen, you might catch a few trends in here, but the best trading is, as you can see, it's out in here. This is where you're going to catch these little trends. Okay, these moves out here, these are little money makers. And so those are the ones that are the good trends in the morning, first thing in the morning, the first hour. And then it doesn't mean you can't trade the rest of the day. You certainly can. You can come back I like to come back at tops of the hour. So right now it's 8:30. So that's the bottom of the hour. So we'll come back. I'll come back and start watching the market maybe 5 minutes before the top of the hour. Maybe at 8:55, I'll start watching the market, because oftentimes human nature, people like to start to do work at the top of the hour. So if they're taking a break right now, they'll take a half an hour break, right? They started trading at 7:30 our time. Actually, out in New York, this is a New York market, even though it's traded in Chicago. It's a Chicago and New York market. So you got the big markets out in Chicago and New York, but New York is kind of the big primer, right? New York City, that's where the financial headquarters are. Chicago, as much as we love Chicago, it is secondary to New York when it comes to the financial world center. But nonetheless, most people trade based on the New York time frame. All right. So whatever's going on in New York, which is 9:30, right? So when the market opens at 9:30 in New York. So that's why we have to be sitting here at 7:30 in the morning here in Utah, because it's 9:30 and that's when the market opens in New York. So I didn't arbitrarily say, well, I think we'll just start trading at 7:30. No, the reason we're trading at 7:30 is because that's when the market opens in New York, which is 9:30 for them. And so we trade the first hour, which is from 9:30 to 10:30. Now, what do you think all those guys in New York are doing after they've just worked so hard, right? That's hard work. I got to sit here and push the mouse button, right? But most of them they're not pushing mouse buttons. Those big firms back there, they're not pushing mouse buttons. Well, they might, because what they do is they push the mouse button once and they say, trade for the next hour. They're just telling their computer systems to trade for the next hour, right? So a lot of them are just doing trading automated systems. Now, you can do automated trading with track and trade. It's a little bit beyond the scope of what we want to talk to today, but see this little thing right here? It's called the autopilot. And you can turn on auto trading. You can just come in here, set up your entire system just right there. And you can say, click one button, start autopilot. You turn that on, start trading, and it'll trade for you the whole morning hour. So you can do the same thing to some degree, all right? And you can build your little strategy in there. Now, we'll have a class on that, and we'll talk about it, and we'll do it, but not today. There are 3 states of trading in track and trade. Again, I told you, track and trade is like the Ferrari of trading platforms. It can do almost anything you can imagine, okay? So it's got manual trading, which is what we've been doing, right? Hit the buy button, hit the sell button, get in, get out. That's manual trading. We've got semi-automatic trading. So we can come in here, and we haven't covered that yet today, but this is semi-automatic trading. When you come into your trading tab, see these little buttons down here? OCOs. I got 4 of them in there. You can have just about as many as you want. You can come in here and create all these little buttons in here. So you can have, looks like up to 7 of these things. I tried to make one more. So I'm gonna make 8. Looks like 8's the max right there. So then we no longer have a little plus button. So you can have 8 programmable buttons. That's a lot. I mean, that you gotta to have 8 buttons programmed in there. You see, and then in here are all my little semi-automatic trading strategies. Now, this is where I do most of my trading. I like semi-automatic actually better than automatic. Automatic's cool. It's fun. You turn it on, walk away, go cook eggs, and it'll sit here and trade for you. But I'm kind of more of a A-type personality, and I kind of like control. I have a real hard time driving my Tesla around because I turn it on to drive, and then I'm like, every time we come to an intersection or a stop sign or something, I want to take over and drive. I'm that guy. So it's kind of the same thing for me in trading too. I have a full self-driving capability in my Ferrari here, in my Tesla trading platform, but every time it comes to an intersection, I get in and start messing around with it, and it lets you. It doesn't care. It's just like the Tesla. You can jump in and intervene and start driving if you want to, and it's the same with the autopilot in track and trade. And I just have a tendency to do that. So what I like to do is I like to come over here and I like to use these little buttons here, and you can see I program into them all my trading strategies. And sometimes we have a lot of these in here because we like to example them. I've kind of skinnied them down to just the ones I use the most. And I'll teach you these one day. Just keep coming back to these classes, and I'll take you down and I'll show you how to do all this stuff. But these are your OCOs. So when we came in here and we talked about our email, and I talked to you, okay, we're going to talk about market orders. We're going to talk about stop orders. We're going to talk about limit orders, and we're going to talk about OCO and OTO orders, right? We talked about that. I put that in there, and then we had all the indicators. So this was the email, and I'm just trying to get through this email. What I want to do today, that's the goal. But I'm showing you the first thing I want to show you is I promised I was going to show you range bars. And I think that this one little lesson on range bars is huge. I think this is going to be a really helpful thing for you because it breaks down the 1 minute bar into a whole bunch of bars. So if you got a 1 minute time frame, it could be in a range bar, that 1 minute bar that's over here that you're sitting there waiting to move your stop or to move a big distance, right? See, these are 1 minute bars. This is from the morning. See how this does not look fun to trade, but yet this is how most traders traded this morning. That would be really hard morning to trade if you were just trading 1 minute chart. And I would say that 90% of all traders in the stock market who go out and day trade, they're using these little 1 minute bars. That's what they're trading on. Okay. And that if I was to look at that this morning, I would have said, oh, that's a really hard market to trade. It's really choppy. But when you come down and you break those down into range bar 12s, oh man, it just makes the whole world a beautiful place, right? Does that make sense? See what I'm saying? See what I'm saying there? And then not only that, because we got the cheat codes turned on, watch this. Now, if I'm going to turn off the Fibonacci, these are Fibonacci range bar charts. Very unique. Very unique. I don't know anybody else except for Mr. Land Turner who trades these. I'm the only guy I know that trades these and teaches these. All right. They're very rare, very unique. It's very difficult to find this out in the broader world. So that's, again, the reason you have a platform like this is so that you can have these very specialized tools. Now, let me turn off Fibonacci and show you what just a normal range bar chart. Now, range bars are starting to become more popular out in the market. Let me turn off that ATR because it's really messing things up. All right. So these bars are starting to become more popular out in the market. So you might start to see some people starting to show you range bar charts. But look at that. That's what you would have seen this morning with just a normal range bar chart on whatever platform you're trading with. That's what you would have seen. That still does not look tradable. It looks very difficult. This morning session was a very difficult morning session for many traders. I bet there's a lot of traders who lost a lot of money today because they don't have a Ferrari trading platform. So if you're going to trade and you're going to actually try to do this for a living, get the right tools for the right job. You know, if you're going to be a mechanic, you're not going to go buy a really fancy set of pliers down at Home Depot and then hang out your sign and say, I'm a mechanic. I'm going to go fix your car now. I got a pair of pliers. You can't be a professional mechanic with nothing more than a pair of pliers. Now, you can sure take off lots of nuts and bolts with a pair of pliers, but what does that nut and bolt look like after you're done taking it off and putting it back on? You've destroyed it, right? So just get the right tool for the right job and you can be much better at what you're doing. So what I'm saying is we got these little secret little tools here that I'm teaching you. Secret. I mean, I put them out on YouTube and try and show people, but you know, c'est la vie. It is what it is. I can't make everybody come and watch me. I try to teach. I haven't got the biggest YouTube channel on YouTube, if you haven't noticed. And then we come out here and we come over here and we click this little Fibonacci. And oh my gosh, we turn on the cheat codes. And then we turn on our other little indicators. We have our two little indicators that we just love here, the ATR, the average true range, and then that little blue light system or the bulls and bears, which tells us the neutral zones, the green bars, the red bars, tells us where those Fibonacci sweet spots are, right? So if we go from low to high, you can see in there those yellow bars. Let me make this a little brighter for you so you can see a little better. I'm going to come over here to preferences and let's make these brighter. Brighter. Come on, brighter. Faster. Make them faster, brighter, Land. Okay, that's pretty good right in there. All right, save as my defaults. Update all Fib new numbers. Okay, so see that? That little yellow bar right in there. That's why I don't have to sit here and draw the Fibonacci ruler every time I see a trend. I can just say, oh, well, that's right where the Fibonacci sweet spot is. Away we go. Now I know if it breaks out of the Fibonacci sweet spot to the upside, goes yellow to green. That's my break out of the Fibonacci sweet spot. That's a buy signal. That's why it's got a little arrow there. Okay, so that's how it works. So those little red, yellow, and green, that's pretty nice. And then the blue light tells us where the Elliott wave is. So count, measure, setup, trigger, follow through, right? Count and measure. That's Fibonacci and Elliott wave. So the yellow bars right in here, they're this little bulls and bears. You don't have to have the bulls and bears. If you can do it without the bulls and bears, that's okay. It's just the bulls and bears makes it easier. You know where the neutral zone is, right? It's mathematically calculated in there and turns price bars yellow. If you like that, and then of course it comes with the Elliott wave tool, which is the little which is the little blue lights. I like the little blue lights because I can attach my order to it and I can trail them out. If you don't have the bulls and bears, you can turn on the zigzag. Zigzag comes with the software. It's not a plugin. And then you can see it in there too, and that'll calculate your Fibonacci numbers for you. It's kind of like drawing a Fibonacci ruler right there, just like that. See that? So that's that indicator we talked about right there to the 50% level. See how it pulled back right to 50%, just like a train on rails, just like it is a red Land's book. Oh, wait. You know why Rand Land's book is the way it is? It's not because the market read my book. It's because I read the market. And then I wrote down what the market does. See that? So you can cheat by reading my book. Then you know what the market does. Because I did all this. Oh, wow, this is really cool. Of course, they taught it to me at the Chicago Board of Trade when I was there working there. So, take it or leave it. Just trying to help you. So that's how that works. It's really cool. And then we got this coming out here, and we're coming out into the afternoon session, or into the first hour session's over, and then the market's dying on us. So again, we would wait until about the top of the hour, and just like anybody, they go take their break for half an hour, they'll come back and they might start trading again around the top of the hour. So at the top of the hour, we might get some more trades. Okay, so that's how you do it. Now, I want to come in and show you the different order types. So let's get that. So the first thing I want to do is market order. So if we think the market's going to go up, we're going to hit a market order. We just hit buy market. Now remember the rules of the market order. It's subject to slippage, meaning you have to go get into the queue and you have to get filled as soon as it possibly can, but it's going to fill everybody else who hit the market order before you. So when you hit the market order, if you just hit it, it's going to get you in as fast as it can, but it's not going to get you necessarily the exact number that it was when you hit the button. You might get a little slippage one way or the other, but that's the goal of the market order, is to get you into the market right now and as fast as possible. And so that's what that is. All right. So we're in the market now. Let's say we want to get out. Oh, we're up $10. Let's make some money. Let's get out. So we hit sell market. Now we're out. And we just took our profits if we made any, or losses, right? So that's the simplest, easiest way to trade. That's level one. Now remember, this is playing a video game. All right, this is one fancy video game tool that we're playing here, and we're mining for real gold. So if you're used to playing video games and you're out there mining for gold, maybe, with those little game characters, think that's what you're doing. You're just hitting here, mining for gold, and you're playing a video game, and we're on level one. And level one, the only tool you have is these two buttons right here. And you have the quantity. You can do a bigger quantity. You can mine for more gold right here with the bigger quantity, but it's just buy market and sell market. That's the way you get in and out. Now, the cool thing about level one game, in this game, when we're playing in the Chicago game, you can hit sell first. Now, you can do that too in the stock market a little bit, but you have to make sure the stock market, each one has a little word up here in the top right corner that says easy to borrow. We don't have that in the futures market, because every single thing in the futures market is easy to borrow, but we're not borrowing anything. We're forward contracting. There's a little difference there. Out in the stock market, when you want to take a short position or sell first and buy back low later, the only way you make money is to buy low, sell high, but you can sell first, wait for the market to fall, and then buy it back at a lower price. They let you do that because in the futures market, you're not going to make or take delivery until sometime in the future. So that's why there's no borrowing of the stock. In the stock market, if you want to take a short position, you have to borrow it first, pay some guy some interest, which is your brokerage firm. And so you have to borrow it, and then you can sell it, and then you can buy it back, and then you can return it to who you borrowed it. That's how it works. It's a little convoluted, but that's how they do it over there. We do it way different over here. A lot easier, okay? Last bastion of true capitalism on earth today is right here in the Chicago markets. So if I think the market's going to go, I just hit sell. And now I just wait for the market to go down. If it goes down, then I can hit buy and I can get out and take my profits between where I sold it and where I bought it. Sell high, buy low, sell high. Still make money the same way. The only difference is you sell first. Now it's going up, still going up, even though I sold. Oh, I'm losing money. So I want to get out, cut my losses, right? Oh, so I buy to get out. So you buy to get out when you sold first. Now, that's called going short. Man, they let you sell something you don't own? Yes, they do. They just let you do it. Don't worry about all the back end stuff. I just explained a little bit about how it works, but if it confuses you, don't do it. In the beginning, level one can just be buy low, sell high. That's all you have to do. But just remember, you can sell first and buy back low later. Try it. See how it works. It's fun. Okay. Don't be scared. It's not real money. It's fake money. Okay. So that's why you have $500,000 in fake money, so that you can sit here and push all the buttons and see what happens. It's not going to hurt you. Okay. And you're going to learn. That's how you learn. Don't say, oh, I'm going to lose my $500,000. I'm going to take a loss. Who cares? Nobody cares. All right. Nobody cares. It's not real money. That's why you're here. You have a learning account. That's why you press buttons. You push them. Break the thing. You can't break it. There's nothing you can do to break it. You can't break it. All right. Because there's always a button. You can come back up in here and you can go help and you can say, I want to reset everything. Revert all my tools to factory settings. Revert to factory settings. Okay. Everything. You can't break it. You can just come in here and push this button. Oh, I screwed up everything. All the colors are wrong. I was playing with the colors. I screwed up the Fibonacci ruler. I pushed all the buttons. They're all, it's all, nobody cares. Just come in here. Hit revert to factory settings. It's easy. All right. And turns everything back just the way you got it right out of the box. Pretty cool, right? So push all the buttons. That's what I'm trying to say. And click right click on everything. Right click on everything. Everything's got a right click button on it. Everything. Even the numbers have right click numbers on them. Everything's got right click arrows on them. Click on it. Right click on everything. If it doesn't have anything right click, well, what happened there? I right clicked on it and it moved. I left click on it. Left click on everything. That's just rotating through all our charts. You just click on the header and it'll rotate down through all your charts. That's pretty cool too, right? Let's get back to where we were. Let's hear. All right, so there we go. So that's how you get a little bit going with your software. Don't be afraid of it. You can't break it, okay? So we're going to come in here, and I don't need all those buttons. I'm going to take it back down to 4. There we go. And now we're going to come in here, and the next order I want to show you is the stop order. Now remember, if we look at our little email that I sent you, and remember the slide that we put up there, a stop order, the rules specify a price to enter or exit on, but also subject to slippage because it becomes a market order, remember? Buy stops must be placed above our current market, while sell stops must be placed below the current market. Let's go do a few, all right? Let's go do a few. Can't break it, can't lose money, nobody cares, it's not real money. Let's go try a few. We're going to come in here and put a stop order in. I'm going to click the stop button, and notice that as soon as I click it, it puts a line on the screen. And if you know where this line is, it's like, oh, it must know where it needs to go. It put it on the screen for me. No. That's 50% between the top and the bottom. It just put it in there so you can see it. Now you bring your mouse over and start moving your mouse up and down on the screen, and it's going to follow you. Now, track and trade's really smart. It knows that if the market is a sell stop order, right? Sell stop must be below the market to be a sell order. So while you're dragging it, it doesn't know whether you're planning on what your strategy in your head is. It doesn't know if you want to buy or sell. So if you put it above, it'll change it to a buy order. See that? It's green, buy. I slide it back down below. Oh, red, sell. It knows the rules for the order type. So you don't even have to remember the order type rules. You just say, oh, I want to get in with a stop, or I want to get out with a stop. And then it'll change to the color or the order that you need. See how it says sell stop? So that's because it's below the market. If we put it above the market, it's a buy stop. It's green. It already knows. So that part's easy. And now all you have to do is say, well, do I want to buy when it breaks above a previous high? So if it breaks up there, or if it turns around, starts going the other way, I want to buy. Or, oh, it's going down. If it comes down to this level here, I want to sell. So this means what it would do is it have to go through your order, right? Have to go through your order and keep on going in that direction. So that would be what we call an intercept order. All right. So again, if we come over here to our little, in here, one of the strategies down here, where's our little football player? There he is. Okay, an intercept order. This is the intercept order right here. This is how you intercept. All right. If the market's moving in one direction, which generally for us is the counter trend, right? The market goes up, and then it makes choppy counter trend. And then when it turns and starts to go up again, we want to capture that entry and go with it. So that would be a intercept. So we use that stop order to intercept the market and catch it and go with it in that direction. So we could put an order in here. Now we can make these move automatically. We can attach them to these little green dots. We can attach orders to the little blue dots. That would be the semi-automatic stuff. So you can come in here and you can make this kind of, because it's got an autopilot in it, right? It's got the technology behind it. So when you're driving your Tesla, you don't have to turn on the autopilot. You can just hit the button and it'll start to drive by itself, even though it doesn't know where to go. It'll just drive down the road. Well, that's what this is. You can turn on kind of a fancy autopilot or kind of a cruise control. This is your cruise control right here. It doesn't know where you're going. You haven't programmed it into the GPS, but it'll just drive for you whatever you put it in there. So, but right now we're just using this manual method, which are these buttons up here. So this is the manual method. You're just driving yourself. These down here, this is like a cruise control. This is the semi-automatic. And then over here, this is like turning on full self-driving, and it's going to just be a robo-taxi for you. All right. All right, so we got our little stop order up here. See that? We can just move it. We can grab it and move it. Once you place it and it becomes a buy order, you can't move it below anymore. Now it's always going to be a buy order, and then it'll stop. It's not going to let you push it down underneath because it's now placed in the market. But we can change the price. It's a buy order. We can put it anywhere we want. Just click on it and drag it and move it wherever you want. And that's where your order is at. Now, again, for those of you who don't know, and I have to tell you, because if you don't know, if you're not familiar with trading platforms and you've never been a trader before, what I just did there by moving this stop, that is really cool. That is really, really cool stuff. We pretty much invented drag and drop orders. All right. Track and Trade did. Clearback, I invented drag and drop orders back in 2000 when I was back in the Chicago Board of Trade. I invented these drag and drop orders. Okay, there's several companies who are now starting to do it. You can find that inside some other platforms have started to copy us and do some of the things we've done. This software that we're talking about has won Stocks and Commodities Annual Reader's Choice Award 7 times. And when you start winning awards like that, people start copying you. All right. So this software has won 7 Stocks and Commodities Annual Reader's Choice Awards. So it's pretty popular software. A lot of companies have copied a lot of things. Now, we've been around a long time. I wrote the software back, started writing it in 1998. 1998, yeah, because I went to Chicago in 2000. So this has been around a long time. We invented a lot of stuff in here. The little dollar calculator, we invented that. That was me. I invented that tool right there. Now you see it in lots of software. Lots of software has that. Risk reward calculator, little risk reward calculators. Tells you how much money you're making between different levels of risk and reward. That's not the risk reward tool. That's this one here. I invented that. Clear back in 2000, little risk reward calculators. Tells you how far money can go, how much money you're going to risk. Okay, I invented that. Clear back in 2000. We were the only software, one of the only software programs that could draw on the chart. Most companies didn't draw on the chart. They didn't drag and drop. They didn't do all this stuff. I invented all that stuff. Now it's almost ubiquitous across the world, across the country. Most companies copied us, did all that stuff. Little Ann Turner from Utah. I'm the one that invented all that stuff. All right. Most companies didn't have all these drawing tools. Most companies, back when I was doing it, you couldn't even draw a trend line on the chart. Now, I didn't invent that. I saw somebody else do that, but they had 2 tools. They had a drawing tool. They had this one here, and they had this one here. You could draw a trend line, and you could draw a line like that. And I thought that was the neatest thing in the world. And I thought we should have all these tools. I thought we should be able to draw circles and squares. And I didn't invent circles and squares either. Those were already done I saw somebody else doing that one. But I invented all these things like head and shoulders formation, 1, 2, 3s, little triangle formations. Nobody had all that stuff. Nobody drew Fibonacci rulers like that. I did all that. All right. We did it in Track and Trade. This got all this stuff. And when I went back to Chicago, and I would stand up in front of the audience, and those guys would say, we need to draw a Fibonacci ruler on the tool. And I got stories about how that all came about. Right? All right. That's enough bragging. Okay. 7 times Stocks Commodities Annual Reader's Choice Award winning software. This is really cool. If you don't know that, being able to move a stop like that, an order like that, that is really cool. All right. Most people have to fill out a little form every time they want to move an order to a different price. Okay, so we do this because we want fast movement, fast motion, and I'm a visual learner. All right, I have to see on the screen where the levels of support and resistance are. I want to see that this is where the previous high was. I want to see where this is the previous high. I want to put my orders on the screen based on those highs. That's why the line goes clear across the screen, so you can line up your orders with previous levels of support and resistance. All right. So that's how that works. That's why that is the way it is. See that? We line that order up. Now I know that order is sitting right at that price of that low bars right there. I can come back here. Oh, I want my order, another order down here. I can come out here and see that right there. That's a low point. I want to put my order. out in the future to touch that point, because markets have a tendency to look back at these previous levels of support and resistance and use them as target areas. So if I want that to be a target area, I want to put my order right on that order. I want it to be right on that price. It's real easy. I just move it there, just take it, put it right there. And I don't have to sit there and try and figure out what that price is and then type it into some box. All right. And now you can start to see that we can start to build very visual strategies out of orders. And that is where the power and beauty of day trading comes in, is because you can start to build using different types of orders, these limits and stops. And that's how you end up with these different types of orders, where you can kind of surround the market and force the market to do things that you want it to do. All right. I call it a squeeze trade, where I squeeze the market between orders and make it give me money. All right. So you can learn about the squeeze trades. All right. So you're going to come in here and you're going to see over here, a lot of what we're doing is the reason you see these lines is because these are different types of orders, right? That's why this little supplement and the manual looks the way it does. See how we put up orders? This is called the old switcheroonie, or castling, I call it. So you set up orders in a certain little structure like this, and you take profits and get back into the market immediately. So you can take profits along the way. It's called pillaring. All right. So the way this thing is structured is, if you're not using all of these different tools and these different strategies, these different methods, that's how this makes sense. So you look at this and it doesn't make any sense to you. But now that you understand what you're looking at, or you're looking at different types of orders, this is a sell limit order. This is a buy stop order. So let's go over and play with limit orders. So let's review one more time. Grab the stop order, bring it above. It's green. That's a buy stop. That means I want the market to go through the order, catch my order, and continue. If you're right, and that would be a buy stop. I'm going to put the stop order below. That would be a sell stop. It's going to go underneath. I want to just go through the market and pick up my order on its way down. And I can move those around, just slide them all over, put them anywhere I want. All right, tighten it right up, put it right up close. Put it right up close. There's a squeeze trade. I don't care which direction it goes. If it goes up, I'll go long, make money. If it goes down, I'll go short and make money. The other side, opposing side, becomes a stop order, right? So that's called a bracket trade right there. Just putting a buy above and a sell below. That way, it doesn't matter which direction the market goes. You're going to go with it. You're going to get in with the market. If it goes down, you'll get in sell. If it goes up, you'll go in buy. You can do that. And then the other opposing order becomes your stop order. If you're wrong, it turns around and goes back up and hits your stop. You just get out with a very small, tiny loss. So that's a nice little trading strategy right there. Okay, so now let's use the limit order. The limit order is exactly the same thing as the stop order. We can put it above or below when we drop it on the screen. Again, if I click the button, it's going to put it dead center of the chart. And then I bring my mouse over onto the chart, move my mouse up and down. I haven't pushed the mouse button yet. I'm just dragging my mouse up and down. It's attached to my mouse cursor. Okay. I haven't got I'm not pushing the button. I already pushed a button on the order. You click the button, it puts it on the screen. You slide your mouse over onto the chart, and it's going to hook to the little cursor. Again, I haven't pushed the mouse button yet. I'm just sliding it up and down. So I slide it up and down. I can go above the market. I can go below the market. You'll know a limit order is just the opposite of a stop order. So any limit order is below the market. That's a buy. So that means the market would have to come down, because this is an open limit order. So that means, and we're not in the market. So the market would come down and have to touch my limit order, which would be a buy. And then it'd have to make money, turn around and go back up in this case, right? Now, we don't use limit orders to do that very often. It's a little bit more advanced strategy. You certainly can. Some of you heard me say that sometimes I will take the Fibonacci ruler, look for a reversal of the market to come back down and touch these different levels, and I'll put limit orders at these different Fibonacci numbers, right? So this is another strategy that we would use. And you can see where I put limit orders in here, and the market would come down, and each time it touched one, it would buy at those lower levels. So I'm buying low, right? As the market comes down, I'd buy, and then I'd buy another one, and then I'd buy another one. So then I would anticipate that the market's going to come down, hit my orders, and then turn around and go back up and make me money. Again, it's a little bit advanced because we call that catching a falling knife. Because if the market's falling and you're buying all the way down, well, it could just keep on going and take you with it, and you could lose a whole bunch of money. So you have to be careful with that strategy, a little bit more advanced. You have to have limits on how much you're willing to lose. So we're going to come in here and we'll erase all those. And then I'm going to hit exit chart right here, which will get rid of all my limit orders. Boom, just like that. And they're all gone. Okay. So now if you take the limit order again, we're going to click the button. It drops it dead center, bring it out into the market, bring it above, turns red, bring it below, turns green. Now I can come up here. And once I click the mouse button on one or the other, do I want the sell limit or do I want the buy limit? If I click the mouse button, that sets it. And then it sends it off to the exchange. All right. The minute I click, there's no order here now. This is just over here on Track and Trade. The exchange doesn't see anything we're doing. They don't know what we're doing. But as soon as I click the mouse button, let's say I want this to be a buy order. I click the mouse button, boom, it sets. Now that thing immediately, the minute I set it to click the mouse button, it sends that order off to Chicago. And Chicago has that order sitting on their books. All right. And now I can move it. Do a change order is what this is. If I drag it and move it to a different place, as soon as I release the mouse button, boom, it sends off the change order to Chicago. And Chicago now has a new order. Now I drag it back down. Release the mouse button. Boom, it sends it off to Chicago. Oh, he moved his order. Now, in the meantime, while I'm dragging, let's say I push the mouse button, I hold my mouse button down and I drag it, you'll notice that there's two of them. And the reason we do that is because if the market comes down while you're dragging, you still have your order sitting there. This is just a ghost. Notice that it says modifying over there on the right-hand side. See there? It says modifying. This is just a ghost. So the market hasn't sent off the new change order yet. This order, the old order, is still sitting there. And so it doesn't actually send off the change order until you release the mouse button. So I can push it up closer like that, release the mouse button, and boom, it jumps to the new location because it sent off the order to Chicago. And now they have the new order at this level. Okay. So that's how that works. That's why you have a ghost. All right. So what if the market, while I was dragging, I'm down here trying to decide where do I want this? And the market came down and touched my order, it would fill. All right. So it would fill because that order is still active. Right. I haven't released the mouse button yet. So as soon as you release the mouse button, that's when it shoots off and sends your order in. All right, so now let's look at these two both at the same time. So remember, a limit order, the rules of a limit order, we talked about those last night. The rules of a limit order say that the market has to give you the price you specify or better. It is not subject to slippage. Like the stop order, you can specify a number, a price, but as soon as it hits it, it's going to put it in the queue and it's going to give you whatever best price it can give you. So it's going to be subject to slippage. It becomes a market order upon the price touching that level. All right. So that's how that works, the difference between a limit order and a stop order. So if I put a limit order in there, the market has to give me the price I specify or better. But if it can't give me the price that I specify, it won't fill it. Even if it comes down and touches it. Let's say it comes down and touches it right there. And it filled everybody ahead of me, but I was still in the queue and they couldn't give me one. Nobody offset my position, right? For every buyer, there's a seller. I'm trying to buy. There's nobody willing to sell to me, but they tried. They're like, oh, shit. Oh, Lan wants to get in. Nobody wants to trade. Sorry, Lan, you said it had to be 2407 or else you didn't want it because it's a limit order. And we couldn't get you 2407. We could have got you 2408, but sorry. I know it came down to 2407, but there wasn't enough of it. Couldn't give it to everybody who wanted it at 2407. So you don't get yours. That's the rules with the limit order. All right. The market can come down, touch you, and not fill if they can't get you an order. All right. Now, what did I just do? I had the order sitting there. I didn't want it to get filled. So I right-clicked on it. I right-clicked on the little triangle. It gives me a right-click menu. Remember, right-click on everything. Come down here and hit delete. Okay. Now, there's preferences. You can change these things around, make them do things. This is how you make them do things, all right? So we're going to come in here. This little X right here makes it go away. Delete it. So you can come in here. Let's say we're going to put a stop order on this one. We're going to go stop, and we're going to come up here, and we can come up here above the market. I just throw it up here anywhere. It doesn't matter. Just throw it up there, and if I right-click on it and say go to the preferences, oh, not preferences. That changes the colors and stuff like that. I'm going to go right-click. I'm going to say I'm going to go to edit the order. So now this is where you get that little box that we're talking about. Now you can come in and you can program, set up some categories for what you want that order to do. This is kind of the little semi-automatic window. Like in your Tesla, you pull up the controls and say, oh, I want you to drive this fast, or I want you to drive this fast. Well, here's what you do. You come in here and you say, we've got quantity 1. It knows right there. Quantity 1, it knows it's a stop. It's right there. It's already filled in because it knows you're modifying this one. And then we want it to trail. We want it to move all by itself on those little yellow green dots. So the ATR is the little green dots. And we got all this kind of stuff in here you can hook them to. Go play with it. Try them all. If you're going to hook it to the zigzag, go hook it to the zigzag. See what it does. Try it. All right. You can't break it. You can't lose money. You can't. It's free money. Nobody cares. All right. Come in here. Hit the price bars back. Oh my gosh, I could trail price bars back. I don't have to trail on an indicator. I can just trail price bars back. And then it has a little thing. How many price bars back? Oh, I want to trail 1 price bar back. Oh, I want to trail 2 price bars back. Oh, I want to trail 3 price bars back. Do whatever you want. All right. We're going to trail it on the ATR. I like the ATR. So this grays out because there's no price bars back on the ATR. We're going to trail on that little green dot. So once I have that in there, now this is if we're going to do OCO. So you have 2 boxes. You have, this is the manual method, right? Manual method. This one down here, this is the OCO. This is the semi-automatic method. So we're not working semi-automatic right now. We're just working in the manual method. So I'm going to hit OK. Oh, I'm late. I waited too long. Now it crossed my little dot. Let's see if it'll get a new bar below the little green dot. See, it crossed it, and I put it up there, and I was a little bit too slow. So it didn't. Now it can't jump to the green dot because the bar covered it. So you got little rules like that. You're going to have to learn them by practicing. That's why you have $500,000 in your account, so you can practice and do things. So you're like, why didn't it jump? Lance said it would jump. Well, it's because the bar is covering the little green dot, and it can't jump down there now. You're too slow. Let's wait. If we get a new bar and it falls below there, it'll jump to it. But it's got to move 10-minute, 12-minute moves. No time. This could be, we could sit here for half an hour waiting for that bar to move because it's a range bar. It's not a minute bar. Let's just wait and see. I'll show you how it works. See that? There you go. You got your new dot, jump to the dot for you. All right. That's how that works. That's one of the little rules, little things you're going to learn as you practice. Okay. So now what happens if it goes up and crosses that green dot, it'll fill it to the long side, right? We'll anticipate a rise in price or a continuation of the uptrend. So it's just going to follow down behind the market on that little green dot right now. And when it crosses that green dot and starts to go back up, it'll get us into the market. So right here, if we'd have done it right when I wanted to and got it on that dot, we'd have been long the market. Now the market's falling. We'd actually be losing money because I would have got in on that little green dot because it came back up, touched the little green dot, would have filled our order, and then turned and fell. All right. So that's how that works. Now, can you trail with a limit order? You can. Watch this. You can come in here and you can say, I want to trail with a limit order. Do the same thing. Come up here, right click, edit the order. Tell it I want to trail on the ATR, hit OK. What's that going to do? Now, if it comes up and touches it, and keeps going, if it goes up and goes this way, well, then you start losing money. But if it comes up and touches it and then turns around and falls, just like it did here, if it comes up and touches it, turns down and falls, well, now you're making money. Just a little bit different theory, right? A little bit different strategy, but think about that. If you get stopped out a lot, see all up in here, sometimes the market's going up and then you're trailing with a stop or something and it comes down and touches. Oh, you got stopped out only to have the market turn and go. Well, if that would have been a limit order, you'd have bought right there and gone up. Now, one strategy I like to do, and it's really popular in the industry, is to run with 2 moving averages, right? So we come in and what we could do is we can come in with our let's turn on the parabolic SAR, which is another moving average. Let's go to parabolic SAR and we go TNT defaults. We'll make it red. Let's make them a little bigger so you can see them. See, now we got this one here. So what a lot of traders do, now let's see if we can make it a little bit more aggressive. Which one of these is going to make that more aggressive? No, wrong way. Let's bring those little dots a little bit closer together. There we go. So now what we can do, see, this is going to give us a sell. If it comes up and touches it, it's going to be a sell. So now we can come in here. I know this is getting a little bit more advanced, but I want you to think about it. We can come in here and we put a stop order on here and we can go edit and we can say, I'm going to trail on the blue light. So it's actually the parabolic SAR. It's the red one. Now look at that. So it just filled our order to the short side. And we've also got an auto trailing stop to the long side. So if it comes up, hits our order and starts to fall again, we'll make money. If it goes up and hits our order, but then continues to rise, Well, now we'll get stopped out with a loss on the parabolic SAR because it's trailing down too. So it has this little channel, right? So we're going to buy at the green or we're going to sell at the red. But if it doesn't go up and stop us out on the red, it'll turn and continue to fall. Now we'll start making money to the downside. That's just a nice little way of automating a strategy that lots of traders trade, and they'll trade between the two green dots, right? So if the market comes down, touches the green dot, and then turns and goes, well, they'll get in on the green dot. They'll have their stop on the red dot, and they won't get stopped out because the market turns start to go, and then they'll get stopped out up here as the market rises and turns and starts to trail back. See that? There's all kinds of fun little things you can do, and that's moving from level 1 to level 2, right? You're playing a game, just a video game, then you're moving to level 3, and then you're moving to level 4, you're moving to level 5, and you start doing things a little bit more sophisticated. And if you want to learn how these things are, well, just keep coming to the labs, and we'll just keep doing it. All right, you'll just watch me every single day that I come and have a lab. I'll sit here and play with the software, and I'll teach you all this stuff, and I'll show you how to do it. But let's put on there, just for the last example, we're going to put a stop above and a limit above. All right. We're going to put a stop below and a limit below. All right. So see that? Now we got a stop below and a limit below. We got a stop above and a limit above. And you can see that a buy stop above the market, or a stop order that you placed above the market, is a buy. A limit order placed above the market is a sell. A stop order placed below the market is a sell, and a limit order placed below the market is a buy. And you can move them around. Once you place them, you can move them. You can't put them, once you place them, you can't push them up above the market. You can't change it. That's only before you place it. Before you send it off to Chicago, you can decide whether it goes above or below. Once you click the mouse button and send it to Chicago, it's going to be a sell order, and it's always going to be a sell order. You can't change it to a buy order. You have to kill it and place another one. All right. So if I want that stop order right there to be a buy stop, well, it's too late. You can't make it a buy stop. That was your opportunity when you first placed it, before you send it to Chicago the first time. Once you send it to Chicago, you can't change it from a sell to a buy. It's stuck there. If you want to now change it from a sell to a buy, you have to delete it. So right click on it and hit delete, and then you can change it. Then you can come back over, put it in here, and you can put it up here, and now you can make a new buy up here. Right. So that's how it works. All right, guys, that's all I got for you today. I want you to play and play and play. Practice, practice, practice. You can't break, you can't break, you can't break. Thanks, Rock. Appreciate you throwing a little thumbs up for me. Appreciate that. I try to work hard for you guys. I try to help. I don't have anything else to do. When I'm done here, I have to, I'll work on Pit News Magazine. That's what I do for you guys too. I work on Pit News Magazine. And so that's why I'd really like you to have Pit News Magazine, because I document all this stuff that we talk about in Pit News Magazine. And so at the end of the month, you get kind of a big summary of all the stuff we talked about. All right. I guess that's all I got for you. I guess since we talked about Pit News Magazine, we can have this guy tell you that it's the most important thing ever.
Look, folks, I was reading this thing, Pit News, right? Great stuff. I mean, back in Scranton, we had newspapers, but I didn't have, the thing with the facts. Claire Christensen, she gets it. Sharp gal. Reminds me of my Aunt Margie. Could parallel park a Buick with one hand. Subscribe.
Subscribe to Pit News Magazine, guys. Go over to pitnews.com. Pick up the magazine. At the end of the month, you'll get a summary of all the stuff we talked about throughout the month. And it's a really good way to stay in touch. And you don't have to even read the articles. The articles are there. They're written so that you have them to reference. But you can just listen to them, because we record all the articles. All right. I guess we got one more class before we take off the week for Thanksgiving. That's going to be tomorrow afternoon at 1 o'clock. We're going to trade during Power Hour. We'll see if we can make $500. All right. We'll use some of these little strategies that we talked about today. We'll use the little limit orders and stuff, and just keep coming, because I'll start going in and showing you how we set all these things up automatically in the with all of these custom Q OCOs. And we'll even go in and we'll start playing with the autopilot. We're going to just play with all this software, and I'm just going to keep showing you how to do it. All right, guys. If you have any questions, let me know. My email address, lhturner@tradementors.com. And we will see you tomorrow afternoon at 1 o'clock. Be there or be square.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.